Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be doing something different than what I normally do in this channel, which is my portfolio updates, the different weekly and monthly distributions I get, the different trading options, whatnot, which funds I'm investing in. This video is going to be more of a theoretical investing into a high income ETF. The one we're going to be targeting today is Roundhill's XDTE. So I'm a firm believer in the saying, if you give a man a fish, you feed him for a day. If you teach a man to fish, you feed him for a lifetime. So I want to teach what I understand about these funds to all of you, my audience, so that you have a better understanding in determining if this is a right investment for you or not. I'm personally invested in the XDTE about $57,000. So I believe in the fund, but don't let that be an influence as to why you should invest, because I do it. Look at the numbers. If this makes sense, pull the trigger or don't pull the trigger. I'm going to add one more caveat, guys. I made a ymax video a few days ago, which was a massive hit, where a bunch of people in the comment section were asking for certain things to be incorporated into the video. I listened to you guys. A big ask was to do XDTE itself, the fund. I'm going to add return of capital, how it's calculated, where to find it. Then I'm going to talk about the taxes. And then also in my previous video of ymax, I did talk about NAV erosion. You're also going to see that here. So let's get started. All right, guys, so here is the Roundhill's XDTE website. And the first thing I'm going to point out here is the distribution rate at 18.13%. When I crunched my numbers and calculated my numbers, this number is very similar to what I got before accounting for NAV erosion, taxes, and things of that nature. So therefore, I believe Roundhill is a more transparent company that is not trying to hide specific numbers to make the funds look better so people invest in. If you guys saw my ymax video, the numbers I came up with are drastically different than what yieldmax came up with, right? And just a shout out to all the people that thought my math was wrong. Give me your numbers. I'll compare them to my numbers, and whatever makes the most sense, we're going to go with that. But from what I did and everything I calculated, that most accurately represented the toil that people are dealing with and how much they're actually getting paid out and actually going to be making money off of, right? So the numbers I got for XDTE specifically was about a 19% distribution rate. We'll go over the spreadsheet in a second, but I just wanted to call out that I am very grateful that Roundhill isn't trying to hide a higher distribution when the fund isn't performing. All right, and I wanted to point out this Robinhood screen for a moment, because I'm just going to talk about the share price that I'm going to use. So right now it's showing like a share price of 52.13, but earlier when I did some of my research, the share price for Roundhill's XDTE when it incepted was about $52.46. So all of my calculations are if you invested into XDTE at inception, right? I want to start with this inception number because I want to incorporate NAV erosion, right? And I want to show people that these funds aren't all perfect gravy and the greatest thing since sliced bread, all right? So the number we're going to use is about $52.46 per share, and all of my calculations are going to be based off of that. All right, the moment all of you have been waiting for, the actual numbers, okay? So I went through Roundhill's distributions and pulled out every single one of them. They were about 40 weeks worth of distributions, and I've annotated them, the first one being paid out March 28th, and then the most recent one being paid out December 27th. Okay, so I calculated every single one of these distributions, put them on this graph, and then did my math based off of it, right? So if we just talk strictly total premium without any NAV erosion, any taxes, anything of that nature, XDTE paid out $10.21 per share. That was pretty good. And if you look at the average weekly payment, it's about 26 cents a share. It's pretty good, right? And then if you look at the premium paid using the share price of $52.46, $10.21 is 19.46% of that. So that's what that total distribution yield is. And then when I pointed out that Roundhill site, it was at 18%. So these numbers are very similar, right? There's plus or minus 2-3%. So that's normal, right? Whenever you come up with numbers. So now let's talk about the NAV erosion piece. So I'm going to go back to Robinhood and show that the share price lost value. So we're going to annotate that number. All right, so we're back here. If you can see, the share price is down about $2.13, as we can see up here. When I did the numbers earlier in the day, the fund was a little bit down, so it was at that was down $2.35. So I'm going to use $2.35 because worse. So I'd rather be more conservative than try to give you numbers that look a little bit better for the calculations. So we're going to use a NAV erosion of $2.35 because the market is taking a little bit of a dip. I have no fear. If you see in the past, massive dips have happened, and then the recovery also has happened. So usually XDTE hovers around that $52 mark. So I have no fear that it will not head up there. So looking back at the spreadsheet, that's where we have the $2.35 on the NAV erosion. Let's talk about return of capital. So I just talked about how I copied and pasted all the distributions for the last 40 weeks. I went through the supplemental tax information for 40 different 19A1s. If you don't know what a 19A1, it's the document that outlines how much of your distribution payment is return of capital versus how much is net, which you're going to have to pay taxes on. So here is the numbers that I came up with. Yeah, so starting from March, the return of capital was 100%. So what return of capital means is that they were pulling out money from the fund to pay you, right? So if the return of capital is 100%, you're not supposed to pay taxes on your money. So then for that distribution payment, you don't pay the taxes on it, right? So basically for 38 distributions in a row, the return of capital was 100%. So you're not going to have to pay taxes on it, right? So what this means is all of these distributions I've highlighted equates to $8.96 of distributions. So you do not pay taxes on this $8.96. The last two distributions we got for XDTE for the week of December 20th and December 27th, the return of capital was 0%. So basically means the net was 100%. Therefore, the two distribution payments that we got the last 2 weeks of December, we have to pay taxes on this. So we have to pay taxes on $1.25 of the distribution. So if we calculate the math there, right, $1.25 divided into $10.21 is a 12.2 tax rate, right? And then we're going to take this number and then move that along to our tax bracket, which you guys can see in the screen here. And I'm going to discuss it more later. But to wrap up just the kind of the front side focus, I want to give you the raw data first. Once you take away NAV erosion from the distribution, which was we have to take out this $2.35 from the distribution payment. And for you to not lose your account value or not lose money and your account value to go down, you have to reinvest this $2.35 per share back into the fund. Otherwise, you're losing out on the money. So therefore, when I calculate this net total premium, this is also not talking with taxes, but after the NAV erosion considerations, you pay it back into the fund, right? You're netting $7.86 per share of distribution. And I also want to do a call out because I noticed this in the comment section. These high income ETFs are not dividends. They are not taxed at long-term gains. They are taxed at ordinary income. So it's your income bracket where you are going to be taxed at. Okay. I just want to get that clear. Right. Now that that's cleared up, the actual distribution percentage with taking into consideration NAV erosion, the real distribution percentage is 14.98%. So a little bit different than, this 19.46%, right? But NAV erosion is super important. And like I said in my other video, it's the difference between you making a ton of money or you losing a lot of money, okay? And just to kind of, sum up, I did talk about that you are going to have to pay 12% of your pay tax on 12.2% of your distribution. So the other 87.8 is you don't pay taxes on it. But I'm going to show the 19A1 document of what I'm really talking about and how I came up with these numbers. All right, so back to the Roundhill Fund. In the XDTE portal, we're at the top of the page. You scroll down and we scroll all the way down to supplemental tax information, right? So we're going to click on that. And then you're going to see these Form 19 alphas. That's where the return of capital is mentioned. So if we see for the first distribution payment that XDTE put out. We're going to open up the form. And this is what we're talking about. We're specifically looking for this round hill S&P 500 0 days to expiry covered call strategy. The net investment is at 0%. So that means for this distribution of 20 cents, you're paying no taxes on it because 100% of it was return of capital. And so what I did is I looked at every single one of these documents and looked to see if it was what was the return on capital. Cool. Now that we got that out of the way, let's look at the chart, which is my favorite part. All right, guys, I'm pretty excited about this chart. So let's get started. We're going to be talking about the XDTE income ETF by Round Hill. The purchase price I'm going to be doing my calculations with is $52.46. This could be whatever you want. I'm just using this as an example because I wanted to incorporate the NAV erosion since the inception price. So let's move down the line. As you can see, the dividend yield, the net dividend yield after NAV erosion was about 14.98%. The net dividend weekly average about 20 cents, was actually 19.65. The net monthly average about 655 cents, and then the net yearly is $7.86, right? Okay. So we're going to be discussing a investment of $1,000, $10,000, $25,000, $50,000, $100,000, and $1 million investment. What that's going to look like, how NAV erosion is going to be affected, how the return of capital is going to affect your taxes. So let's get started, right? I have calculated the investment. If you had $1,000, you would buy 19 shares. $10,000 is going to get you 190 shares of XDTE. $25,476, $50,000, $953. The $100,000 investment is going to give you 1,906 shares. And for the $1 million investment, it would net you 19,062 shares. Right. So now let's calculate the weekly income. Some people complained in my ymax video that I should have done the weekly income, but end of the day, the net yearly is what matters, right? The weekly doesn't. But I still wanted to add it in there just in case, just to add another data point. I don't have a problem with that. It's pretty simple, right? So let me get the data out there. So for the weekly income with 1,000 shares, or 19 shares or $1,000 investment is going to get you $3.75. This is pretty low, but end of the day, some investor out there does have $1,000 here, and I wanted to show it. Don't be discouraged. Keep investing. Don't ever stop. Right. But for that $10,000 investment for 190 shares, you're going to get about $37 per week. For 476 shares, you're going to get 93 shares. $93, not shares, excuse me. For 476, you're going to get $93 per week. For 953 shares, you're going to get $187. For 1,906 shares, you're going to get a weekly income of $374. And then for 19,000 shares, you're going to get a weekly income of $3,745. That is pretty sick, right? So now let's talk about what that looks like over a month. So let me throw those numbers in there. Bingo, bango, right? So for that $1,000 investment, your monthly income is going to be about $12.49. For that $10,000 investment, $125. $25,000 will get you $312 for monthly. $50,000 is going to net you $624 monthly. That $100,000 is going to net you $1,248 monthly. And lastly, this is like the best one. The monthly income for $1 million investment is going to net you $12,485. That's you literally doing nothing, and you're getting $12,000. We all hope to be there one day. And so now let's look at that over a year period. Boom. And the numbers are in. Let's talk about it. So going down the line, you guys know where the $1,000 mark is now. So the yearly income for a $1,000 investment, $149. $10,000 yearly income is $1,498. The distribution for a $25,000 investment over a year is $3,745. For $50,000, $7,491. For $100,000, it's $14,912 or $82. $14,982. And then for the yearly income for $1 million investment is $149,828. So let's now talk about taxes, something nobody really wants to talk about, but it is very important. And that was a big ask from the previous videos, right? So what I want to do real quick is here I have this other chart where I got it from the IRS site for taxable income. So this is how our tax system works. It's a gradual system. So any money from $0, well, you can't get taxed on $0, but anything from $1 until $11,000, you're going to get taxed at 10%. So anything above 11,001 to 44, anything in this number is taxed at 12%, right? And then so forth, right? So anything from 44,000 to 95,000, that new bracket, that in between, is taxed at that 22%, right? It's not one flat rate for how much money you make. It's different levels, right? So this first 11,000 that you have, it's going to be 10%. All 11,000 to 44, everything in between that, 11,000 to 44 is going to be taxed at 12%, but you also still counting here the $11,000 in taxes, which is 10%. And then going forth, if you make somewhere like $95,000 a year, then you're getting taxed from 44,000 to 95,000 at 22% tax rate. If you're a high income earner that's making $182,000 a year, you're paying all of these taxes at these different levels, right? But then any number from 95,000 to 182,000, you're going to be paying that rate at 24%. And if you make over $231,000 a year, you're paying all of these taxes at these levels, right? But anything from 182 to 231,000, you're paying at this 32%. And then if you're making, $578,000, you're paying all these different tax levels of 10% for this money, 12% for this level, 22% for this, 24% for that, 32 for this. And then also once your number hits, your salary or income hits $231,000, you're paying anything from this number to this and so forth. Anything after 578,000, 37%. So it's level. So it's not one flat rate. It's all different rates added up. Okay, so we kind of talked about how taxes work. Is it confusing? Clear as mud? Great. Okay, the reason why I came up with the return of capital number of, if we scroll back here, 12.20% is we're going to use that to see how much money of the distribution we're going to need to pay taxes on. So remember that number, 12.2%. From the yearly income of that $1,000 investment, we're going to have to pay taxes on 12% of this income. So 12% of the income of $149.83 is $18.29. Because this number falls in between this $0 to $11,000 marker, we're only going to have to pay 10% on this $18. So it's actually really low. So the taxes owed on that $149 is only $1.83. So pretty nice, right? So that's why this return of capital is kind of a big deal in determining if you have to pay a lot of taxes or not. Yieldmax was pretty bad, or ymax was pretty bad, where you did have to pay a lot of the percentage. So most likely, if you were to invest into a yieldmax and aren't putting too much money, I would put it into a tax advantage account like a Roth IRA, or if you can, a 401k. But something like Roundhill, with their return of capital being so high, you might be able just to hold this without having to have a big tax burden at the end of the year. So personally, for me, I already am maxing out 401k and Roth IRA with different investments like SCHD or just S&P 500 in general. So my goal for my Robinhood account is just pure income. So I'm keeping both, yieldmax funds and Roundhill funds in my portfolio. But that's for the $1,000 investment. And for the $10,000 investment, the yearly income was that $1,498. 12% of that yearly income is $182.79. And because this falls in line, with that $0 to $11,000 mark, we're only paying 10% taxes. So of that, $1,498, we're only paying $18.28 of taxes. So I'm going to kind of speed this up now that we kind of get the idea. So for that $25,000 investment, the yearly income was $3,745. So 12% of that $3,745 is $456. And what we have to pay taxes on, it falls between this 10% bracket, is 10% of that return, or that net after the return of capital, right? So that's only $45.70. The $50,000 investment, this is somewhere where I'm at. I'm invested about $57,000 into XDTE. My yearly income is going to be somewhere around, $7,491. After you take out the return of capital, we only have to pay taxes on $913 of that $7,500, and it still falls in line with that 10% tax bracket of $0 to $11,000. We only have to pay $91.40. Moving on to the yearly income. And so one more caveat now that I am thinking about it is that I'm going to assume for this scenario that you don't have an additional W-2. This is like you're on retirement and you're just collecting this for a living, right? So that we don't have to confuse any other number. So the math is a lot simpler. Cool. So for that $100,000 investment, we had a yearly income of $14,982. 12% of that, 12.2%, is $1,827. And because this was our net that we have to pay taxes on, it falls in line with that $0 to $11,000 again. And we're only going to pay $182.79 of taxes. Now, this is where it gets interesting, where I was talking about the different levels to this, right? So for the $1 million investment, we netted a $149,828. And if you do the return of capital calculation, we only have to pay taxes on $18,279.07, right? So you can see this number, $18,000, is above the $11,000 threshold. So this is how this is going to work, right? So for the first $11,000 of the $18,000, we're going to have to pay 10%, right? So that's going to be a $1,342 tax bill. Okay. So then anything above that $11,000 to the $18,000, because it fits in that up to $44,000, we're going to have to pay that at a 12% tax rate. So the $7,000 difference from $11,000 to $18,000, we're going to have to pay that at 12%, and the taxes for that is going to be $873.49. So I'm going to show the tax numbers down below, right? So in total, because of how Round Hill does their return of capital, you have to pay taxes on 12% of the distribution, right? So 12% of the distribution was $18,279. And then once we calculated taxes, this being 10%, this being 12%, on a $149,000 investment or in distribution, you're only going to have to pay taxes on $2,215. So that's where the tax savings comes into play when you talk about return of capital. So that's how that works. All right, guys, with that being said, that wraps up the video. I appreciate every single one of you for watching it. And I hope that you guys can like, comment, subscribe. I read every single one of your comments, and I appreciate all of you for doing it. It really does mean a lot to me. And I hope to grow this community so that we can, bounce ideas off of each other of what funds work, what funds don't. It is good fun, bad fun, things of that nature. And I love that community. I love the interaction. Besides that, guys, love you. Appreciate you guys for watching. Be safe out there. Enjoy your journey. Have fun out there. I'm out.